please give a round of applause for your incredible panel. We got some rock stars over here. So Redalpine, TX Ventures, Swisscom, Wingman, and obviously our partners. Yeah, Swisscom I've said. So please, guys, take a seat.
Thank you, Pavel, for the introduction. Thanks for having us all today. I'm looking forward to a very interesting conversation over the next half an hour with some top investors who are involved in the fintech space. So how about we do a very quick round of introductions, starting with you, Lukas, and moving in this direction before we kick off the questions.
Yeah, hello everybody. Thank you for having me. I'm Lukas. I'm a founding partner of Wingman Ventures. Wingman Ventures invests in promising tech companies at pre-seed and seed stage. And prior to my activities at Wingman, I'm co-founder of Eat.ch, the food delivery portal, so I know a bit what it takes to build a startup.
So, Krzysztof Bialkowski, thank you for having me here. I represent TX Ventures, so it's a ventures arm of TX Group. We are a non-strategic investor. We invest purely in fintech. We invest from seed to Series B, from $500,000 to 5 million tickets, and we deploy up to 20 million a year of capital. Thank you.
Good morning, everyone. My name is Semih Kacan. I'm an investment manager at Swisscom Ventures, the corporate venture arm of Swisscom. We are an early and growth stage investor, investing in Series A, B, but also seed, with ticket sizes 2 to 10 million within Switzerland, Europe, North America, and Israel.
Hello, everyone. Great to be here today. I'm Oliver, part of the investment team of Zurich Cantonal Bank. We're heavily dedicated to startup investments since 2005, invested in more than 250 companies. And together with the Swisscanto Growth private equity fund, we cover all the stages from early stage to scale up to growth. And yeah, for fintechs, of course, we can even add smart money.
And my name is Alex. I'm a partner at Redalpine, which is a VC fund based here out of Zurich. We're not a pure fintech player, but we have quite a few interesting names in that space in our portfolio. Great. So, guys, we live in very interesting times. Lots happening, especially in the context of fintech. So I was just wondering, as investors, has your risk appetite changed given the different market environment right now? Maybe we kick off with Krzysztof. Do you want to start?
Happy to start. Of course, it has not changed. I mean, we are super excited about fintech. To be truly honest, we think that we are not even halfway in what fintech will become. At the same time, taking into account the market, today we are, as always, more conscious. So we just look a little bit more on companies and business fundamentals, but this was always the case in our investment strategy. So we have never invested into inflated valuations. So we are all good.
Great. Lukas, how about you? What is your take on that?
Yeah, same. So our risk appetite didn't change that much. I mean, we are in risk capital, in venture capital, so we are here to take some risks. And yeah, I guess in the earlier rounds, pre-seed, seed, this valuation inflation didn't take place that much. So yeah, no big strategy change here. We are even doubling down with a second fund later this year. So yeah, I would say we go on as usual.
And over in this end?
Yeah, I mean, first as well, we haven't changed our risk appetite. We continue to invest, maybe more early stage than late stage due to the uncertainties we see currently in the market. We've just raised our 300 million fund, so we would like to continue to support the ecosystem, and whereas being more diligent really on the late stage side. But I think the business model and the founders team, if they're a good one out there, we continue to support.
Got it.
I can continue on that. I mean, our team has a strong mandate from our bank to support startups. And so we are willing to take that risk. Even, I think, in this stress market, we see it as a mission to support. So, for instance, if we look at the COVID year 2020, this was, in fact, our favorite record year in terms of investment. So we're still very active in startup investing.
So for all the founders in the room, good news. I'm guessing there's still a lot of dry powder here, so knock on these guys' doors in case you need funding. So Krzysztof, you mentioned inflated valuations. Could you tell us a bit about how you think valuations have changed over the course of the last year? Obviously, we had the perfect storm of, firstly, the pandemic. Now we have certain geopolitical and macroeconomic challenges. So how do you see the evolution on the valuation front?
Thank you for the question. So I have several observations. I mean, first of all, of course, we hear a lot from the other side of Atlantic that for some discounts. But to be truly honest, in super early stage, those discounts are maybe not there yet. And they don't consider rather later stage companies. What we've seen is that some founders are trying to do some kind of reality check. So they come with inflated proposals, and on the other side, investors, they become a little bit more conscious, especially for capital-intensive businesses. But that's it. So I think that it's still good businesses will get good valuations.
Wonderful. And Semih, could you tell us maybe about what kind of business models can succeed in this tough environment? We heard about capital-intensive business models. Could you tell us a bit more about your take on that front?
Sure. I mean, I think there are different angles to that. I mean, first of all, I think in such uncertain environments, it is good to have certainty on your cash flows. So I think SaaS models are certainly those that we would favor today. And also given the kind of uncertainty also on the client side when it comes to capital spending, I think if you're selling towards the mid-market or to the enterprise segment where budgets have been spoken for the whole year more or less and the strategies have been outlined, those clients will continue to demand the startup solutions in the market. If you are basically on a transaction-based business model, I think you have currently some issues that you have to handle. But I think for all the kind of business models, it's also the team that is really kind of fast in changing and adapting to the current environment. And I think for now, it's really about increasing your cash runway and making sure that you have enough cash on the side to basically cope with the environment that we see today, but also trying to increase your profit margins that will actually contribute to that as well.
Wonderful. So do you guys agree with that statement? Would you suggest that these are sort of the winning business models? When we look back at some of our investments, we've actually interestingly noticed that the crisis year vintages are performing extremely well. Would you tend to agree with that? Okay, great. No contrarian views to that. Fantastic. Now, the next one is for you, Oliver. And I was just wondering, we spoke about the challenges of today's sort of environments, but do you think it's an opportunity as well? Is it now a good time or a bad time to invest in fintech specifically? And if so, why?
So when we do our investment strategy, we always think in long terms. Of course, this is a short-term disruption or distortion of the market, but when I put it in a long-term perspective, we're, in my opinion, still in a post-financial crisis banking industry, meaning you have a high regulation, a high capital requirements. I think there is still lack of innovation, legacy systems in place. So all this is a kind of a profitability issue. So I think this creates a huge opportunity for fintech still today. So I mean, what of course is, especially in crisis, what is important is trust. And I think this is probably one of the big challenges of fintech, that they don't have this like 150 years of history and sticky customer base like a bank, for instance, has. So if a fintech manages to overcome this challenge, I guess they're very well positioned in this very dynamic race that we have today.
Are there any fintech themes that you would have invested prior to this situation, but are now sort of taking it easy with those? Any kind of themes within fintech or business models that you would sort of stay away from now?
I mean, that's probably a huge topic, but we were, as a bank, very cautious when it comes to like the crypto topic. I mean, there's obviously a lot of opportunities around it, but also risks. And when you see, of course, the currencies now, you see that risk. But I mean, there are a lot of topics which come with new technology which is available. I mean, like whole Web3 embedded finance topic. There are much more new topics, so I guess there are a lot of opportunities around.
But maybe to add to this, I mean, we have seen in the opening speech, I think, very well presented that there is now a need to be kind of very diligent on your cost, right, and to manage this. So I think if you do have a solution that enables the banks out there here in Switzerland to manage their costs, which in essence mean increase the profit margins, because as we have seen, the margins in the market have come down, and they continue basically to come down as banking is more or less a commodity. We also see now non-banks coming into the ecosystem. So it's really about having cool solutions that help you to bring down those costs. And here as such, I would say, players in the digital asset space that can basically reduce operational costs. And here we do have, let's say, Fireblocks, for instance, in the portfolio. I think those players will continue to, from the current market environment.
Got it. We mentioned crypto, so I might just segue into the Web3 space, and we will do this very briefly because I know there's another session on this topic later on in the day, but could you maybe share your opinions on bearish or bullish? Maybe we start with Lukas.
Bearish at the moment, I would say. Not really bullish, but of course interesting technology, and we keep on having a look at all the deals and all the teams, and at the end, if a founder team is really convincing, and if we see some good solution to a real problem, we never hesitate to invest. But yeah, it's very volatile at the moment, and let's see how it evolves.
Krzysztof?
I would say that Web3 is just a buzzword. You know, that's the problem in all those discussions. What's that really? So in this fintech, as we are in a fintech conference, I think we should talk about the fintech component of that, and this is more like DeFi and crypto and so on. So I think that short term we are bearish, and long term we are quite bullish on that. We have just invested into a crypto startup. I can't say the name, but it shows that we are looking into that space. We are very interested in the space. But as Lukas said, we are looking into businesses that really create value and have some business fundamentals where you can invest into, and not just some nice stories without any business behind. So we are looking into that. We are quite bearish short term, but bullish long term.
I wanted to say cautiously optimistic, but I think that's too bullish. Over on this end, Semih, do you have a slightly more encouraging view on that space?
I do. I mean, I am absolutely bullish on that institutional digital asset part. I think to take up what Krzysztof said, being here on a fintech conference, what we are seeing is basically the new era of financial market infrastructure. And in the recent, let's say, 12 to 18 months, we have seen more and more adoption on the custody side, which basically distributes the wallets to all the kind of institutional players, which is the entry door to the let's say, digital asset world. And now it continues, right? So, and you see that from today's trading floor, you need to have a portfolio management system, an order execution management system, compliance, risk management, data compliance, and you can continue like that. And here, basically, we are really bullish from a Swisscom Ventures perspective to invest across that value chain, because what we have seen in the last years is that institutional adoption in that space is there, and that trend continues. I think if you talk with colleagues and if you listen to the market, more and more traditional banks are stepping into it. So, and I think here's the opportunity for us, especially within Switzerland, to support young startups and that ecosystem.
Maybe just to add on that what Semih said, I agree with you. I think that the key word here is regulation, right? I mean, you know, crypto and DeFi world benefited from no regulation. At some point, this regulation kicks in, and then the question is, how will it kick in? and what will it mean for crypto and for DeFi. So I'm a strong believer for DeFi. I just think that there's a lot of uncertainty linked with regulation.
When I can add to that, I mean, I also don't like to only talk from a technology point of view, but also what Krzysztof said, look at it from a business point of view. And I think as long as a company has a clear value-added service that either increases efficiency, effectiveness, or security of like a financial service or financial infrastructure, I definitely see the potential behind it. And then for me, the technology is like the enabler of such a business model, but I would not say bullish or bearish basically on the technology.
So it depends what it is, essentially, like with anything, really. Wonderful. So you mentioned Switzerland, you mentioned regulation. I was wondering whether you guys, you obviously are based out of Switzerland, you invest in fintech. I think Switzerland has a particularly, strong positioning when it comes to that space. Do you as investors see differences in fintechs being set up and run from Switzerland versus Europe? What is your take on that? Are there certain specific benefits to actually setting up shop here in Switzerland? Should we start with Lukas? What are your thoughts?
Yeah, of course, we have a long tradition with banking and so on. So I guess we have a lot of qualified workforce here, so people understand, have it in the DNA. So I guess this is a big, and probably also a bit on the trust side, on the regulation side. So I think we have, some advantages compared to other countries in Europe. On the other side, sometimes businesses win, with some kind of fresh blood, people not really into the space before, just some very new approaches. So maybe we are also very traditional in thinking. So, but overall, I think Switzerland is a great place for fintech, and this is why we are keen on finding the best teams in the fintech space and like to double down on it and help build the companies.
Yeah, I can definitely share that view. I mean, Switzerland has a big tradition when it comes to banking, and I mean, I mentioned before, trust is so essential in that space. And I mean, don't want to make too much commercials about our bank, but we're the safest universal bank with AAAs from all the major agencies, and this is definitely because of the ecosystem, because of the healthy finances of the canton of Zurich, because of Switzerland political stability. And I think this does not apply only to our bank, this applies to the whole ecosystem.
Krzysztof?
Fully agree with both of you guys. I would just add, I mean, this conference is a proof of it. This is a fantastic ecosystem and fantastic place to invest into fintech. I would just add that maybe what is important for us when we look into the companies, I mean, we love companies that are founded in Switzerland, but we love when those companies, of course, look at the global markets, because fintech is global. So Swiss market might be super attractive in some niches, but in general, fintech is a global play. So, of course, funded in Switzerland, global thinking.
I mean, absolutely agree with you, Krzysztof. I think market environment top. And what we like is basically a tech play that has the potential to tap out of Switzerland. And you can compare it to a play that needs regulation, that needs licenses. Here we do have a slight disadvantage, to be honest, because you cannot really, if you would be in Europe, do EU passporting and offer your product across Europe, across the whole market, whereas you do have differences here in Switzerland. But if you do have a tech-focused play with a strong and execution-driven founders team, I think this is really what we would prefer to.
And how do you view the talent pool? So the feedback I always get from founders is there is an incredible talent pool, but boy, it's expensive. I need more money from you guys. What is your take on that? Do you still think that it's important to invest in the talent here for these companies, especially on the engineering side?
Yeah, maybe I take it. So yeah, of course, this is like everybody tells you, hey, in Switzerland, engineering or basically all the salaries are really high. But if I talk to my colleagues in Berlin or London, whatever, so salaries are even higher, and I'm not talking about the US. So I guess in the meantime, we have a great talent pool here from the technical universities. We have like the whole Google, Facebook, Disney, all those tech companies having their tech headquarter here. So we see also some talents going out, joining the startup. So I guess from a talent point of view in the tech field, it's very attractive, and it's not like that we overpay. We see the biggest salaries we don't see at the moment in tech anymore. It's more in the sales field. So if you want to hire like a sales director for a software business, this is at the moment this is what we observe. So Switzerland is a good place for talent at the moment, I would say.
Do you guys agree?
I mean, well, it's definitely great. I mean, we're in the deep tech space, as others are as well in this panel. And I mean, for us, the biggest resources are, of course, the universities, the technological universities, the ETHs, the applied science universities. I mean, this is kind of a great starting point for building a startup ecosystem above. And I think this is really a long-term advantage that we really should take care of.
Got it. Zooming out a little bit and talking about fintech again in a more generic way, Krzysztof, do you think that we're now in a sort of disruption, growth, consolidation stage in fintech? Do you think we've sort of squeezed out all the innovation there is to be made and no big changes are to happen? Do you think we're at the, at a very interesting point in time where innovation will again be sort of fast forward like during the pandemic? What is your take on that?
I'm super excited because I think that the real innovation is ahead. Honestly, I think what we tackled in fintech is on B2C side is this UX, convenience and so on. That's it. And then on the B2B side, of course, it's more efficiency, automation, play, and so on. I mean, sometimes I'm surprised it's not even done yet. Sometimes we talk to founders and they say, hey, we have this product, this platform, this software, because the guys, they do it on paper or they use a piece of Excel to do it, still now in 21st century. So I'm just shocked. Is it true, really? Can you still make money out of that? Yes. So if someone tells me that we have done what should be done in fintech, I think it's absolutely not the case. And I think that the most fascinating part is only coming. I mean, I strongly believe many things might change in the long run. I don't expect this to happen quickly in terms of decentralized finance. I mean, embedded finance, we are nowhere in embedded finance. I mean, I think there's still so much we can do. So no, I think that fascinating, exciting times ahead.
Do you guys agree with that statement? I guess you have to, but do you have anything to add?
No, I think the innovation will continue, and will the pace be the same as we have seen post-pandemic? Time will show, but there will certainly be areas that will have a higher pace. I think instant payments, account-to-account payments, CFO suite are those type of areas which will continue to innovate on a high pace. And then also on the other hand, it's about the market adoption, right? I believe we will see, and as we have seen also at the beginning, the market is going towards a modular structure where the API play and the API orchestration will be more and more important, be it towards the core banking systems or the systems in the back and mid office. And I think here it's also important that the clients, the banks and such, are also ready for such innovations.
The banks in the room, you heard him. Right, so maybe the last question, and then we leave some time for the audience to also have a word and ask the panel their questions. If your portfolio asked you for advice, or maybe the other way around, what advice do you give your portfolio companies right now? And what advice would you give founders who are currently trying to fundraise? So maybe I'll start with Oliver.
Thank you. So, I mean, as we are in especially volatile times today, I would say keep an eye on your worst case scenario. Keep an eye on your financial reserves because, I mean, even in normal times, financial funding rounds can delay or investors can jump off. So really put a lot of force on that, on managing the burn rate, because I think what is really poison to the business if you have to lay off people, I mean, this is an impact on culture, etc. So if you manage to plan your finances wisely, I guess then you're ready for this difficult times.
Semih?
Yeah, I think Sequoia and Y Combinator have summarized that very well. I mean, it's about review your cost base, your OPEX, have a scenario planning, as you just mentioned, and basically, if you're able, increase your profit margins if possible, but also get cash if you are able to get cash now and raise it, because we don't know how long this kind of recovery phase will take. And I think that is very important, but also take it as an opportunity. Because I think the example in the Sequoia presentation was that Ayrton Senna was overtaking 16 cars when it was raining. I can also refer to another analogy in 1954 with the World Championship, where they said in Bern that the Fritz Walter Wetter, when it was raining, it's basically the best opportunity to outperform Ungarn, and this is what they did. So I think now is the time to basically take the chance and to win the market.
Before I move on to you guys for the same question, you mentioned fundraise now if you can.
Yeah.
Do you think founders should have a different idea about the valuations they should expect or the round size? We touched on that topic a little bit already, but there has been a shift clearly since the last few years. So what would you advise a founder who's fundraising now? Should they be more conservative, or should they stay as ambitious about the valuation and round size as they were before?
I'm not sure if there is a clear advice, but I think what has happened is in the last 2 years, founders have been spoiled by the market. There was so much cash in the market. There were US VCs, European VCs, paying very high valuations. I mean, I was involved in one deal where they have paid 120 ARR, where you wonder, how are you going to make your money at some point? So, and in the recent deals where I'm in, I already see down rounds. I already see founders accepting that down round. And I think here basically is to have, I mean, the market is normalizing, if you want to say so, which is good. So we see that we are not in a hype scenario anymore. So if you're willing to accept cash at a very kind of realistic and meaningful valuation level, and you see the multiples will come down now. I think they haven't done really in Q1, but now we will see that, I think, after Q2, you will be well equipped, because it's a marathon and not a sprint, and I think that's very important.
Sounds good. Guys, we had a lot of time. We've now run out of time. So in 30 seconds each, what is your take on what advice would you give your portfolios in those times, and what advice would you give a founder who's fundraising now?
Yeah, of course, first of all, don't panic. I mean, what can you do? You need to push your business forward. And second, I mean, from a fundraising perspective, I would also extend my runway as a founder if I can. And if there are some limitations on the terms, maybe accept a bit, not the terms you had maybe before, but most important, don't panic, push forward, maybe focus. And spend the money wisely, maybe on sales, on good people, and not on refurbishing an office for 200K at the moment. So that's my advice.
Super, Krzysztof.
Yeah, same here. I mean, focus, extend your runway, and be realistic about your valuation.
That was super brief. Thank you. Awesome. Thank you very much, guys. And now I think we have a little bit of time for some questions from the audience.
Just to follow up on what you were discussing, and this is a question for the panel, but also for you, Aleksandra. And what's your opinion if a founder would come and say, we want to raise this non-dilutive financing, a la Clearco, Silicon Valley Bank, just revenue-based financing, as a way of extending runway, delaying valuation talks or eventually moving into profitability later on. What would be your reaction as VCs? And how pertinent would this be for Switzerland, in your opinion?
Maybe.
Do you want
I
to
mean,
take it?
I can maybe very quickly start. Revenue-based financing is not going to solve a cash flow problem. Typically, it helps with quicker growth to then raise a better round. And to be honest, we looked at such options as well for our portfolio companies, and for some, it made more sense than others. So I wouldn't necessarily per se speak against it. I think it depends on the individual situation of the business and what they want to use the money for, but it's not going to solve a cash flow problem. So if it's for growth, marketing spend, and they have the resources to pay it off according to the terms, then we would have nothing against it fundamentally.
I mean, from an investor point of view, it's of course if you can add or top your equity investment with non-dilutive funding, it's per se nothing bad. Always considering what strings are attached, but in general not bad. But of course, when it comes to a liquidity issue, then you definitely have one party more on the table which have totally different incentives. So this may be a problem in the future if you don't match your revenue targets, etc.
Do you guys have anything to add?
No, I think that
No,
you
no.
summarized
Pretty
that
much.
very well. It really depends on specific case.
Yeah. Any other questions? There's someone there.
Thank you, everyone, for your inputs. It was really interesting. I'm part of a syndicate to invest in early-stage climate tech startup globally, and we see a lot of startup, especially from the US, raising on safe convertible or generally on convertible rounds. In the current climate, what's your take between, in early stage, investing through equity round or convertible round, where the valuation is delayed?
Yeah, maybe I take this. Basically, we are interested in equity rounds. We also have done safe one so far, but I think it's not only about the structure, but it's a bit, if you do an equity round, you make everything like proper from the beginning. You have like a proper cap table, proper shareholder agreement, everything is done and settled, valuation and so on. If you do only the convertibles, you delay this kind of, in my opinion, homework for the founders and investors to a later stage. And so this is why we prefer equity rounds.
Same here, we prefer equity rounds, but I mean, convertibles make sense also for bridging, and they are useful, we do them, but again, it depends on the context, it depends what, convertible needs to convert one day. The question is, how long does it take to convert? How well we know people, who else is in, etc. So again, I don't think there's one answer to that question. It definitely depends.
Yeah, it depends really on which chair you're sitting. So from a VC perspective, I agree with my colleagues. From a founder's perspective, I've been a founder myself. I would say if you can meaningful raise money with a convertible, do that. Have that cash, build your business, and then you can review valuations, cap tables in a later round.
So maybe just one last thing that I can add is that we also are open to be part of bridging rounds of convertibles, but we don't like it, especially as a first-time investment, because if you're a debt holder, you're not the same involved in terms of shareholder rights, etc. So this is one topic with starting with the convertible.
Good. I think we're actually out of time now. So, but if you have any other questions, there will be a networking lunch, I believe, later on, so you can approach any one of us with any other questions bilaterally. Awesome. Well, thank you so much for listening in, and thanks to the panel for sharing your opinions.
Everybody, incredible insights. Thank you so much.